Hello, everybody. Today we're going to be discussing something very interesting. My 2019 Bitcoin prediction juxtaposed to the 2025 data set. You want to stick around for this one because by the end of it, you will think I've had a crystal ball in my ability to predict this. However, it's been nothing shy of brute mathematics and rather simple logic. Um, the second part of this video will be a time capsule where I take you to a video I captured in 2019 explaining all of these crazy quadrants and colors and why all of this is the way it is, explaining to you the mathematics and the logic behind it, and thereby making the prediction. At first, we'll start by showing you this same chart, unaltered, in its current state, populated by the current market data, juxtaposed to the same screenshot of the same chart as of 2019 when Bitcoin was trading at $3,900. I want you to pay close attention to the screenshot of these colorful regions at the top and the bars, aka the days, and which they are designated. In the top left-hand corner, you'll see 526 bars for the blue region, which is designated as the post-halving region, then followed by the red region, 445 bars, that is the bearish market, then 665 bars for the green region, which is designated as the trend reversal for the bullish market. Below it, you'll see the orange region, that's 490 bars, that is the region of accumulation. Then followed by, again, the blue region, which is post-halving, that is 310 bars, followed by the purple region, which is designated to be the bull run region, the absolute maximum upward momentum for Bitcoin, which is designated as 110 bars. Swap back to today's chart. As you can see, it's a live chart. All of these regions are exactly the same, unaltered, and this chart has simply been populated. As you see, and later while we'll be explaining the mathematics and the logic behind it, that Bitcoin retraced into the bottom right-hand quadrant of this fib retracement, both on price and time, that I explained, the math and logic behind it. Then it fell into the bottom right, into the fib within the fib quadrant in the bottom right-hand corner, retracing in and around the 786 and 618 region as it has previously. Then after the 89, which is very clearly designated here, we see shortly after an actual upward momentum on Bitcoin. This is the region of accumulation within which we did have a very wide price movement from 14K all the way down to 4K, which is arguably accumulation, perhaps not, maybe skirting the lines there a little bit. But the bull market and the trend reversal is ever so clear after that point in time. Post-halving, we start seeing a much more kind of concrete and strong upward movement as predicted. Now, the most fascinating part about this prediction is this purple region. This purple region that I isolated within this zone many years back. This is literally a 2-year plus prediction into the future on a time sequence, which is very hard to get correct. But you can clearly see that within this purple region, that once it enters in and around this point, Bitcoin really starts very closely to this region, going parabolic in its upward movement. Now, also, very interestingly, you'll see the ending of this purple region coincides almost to a shocking degree of accuracy, only a few days out from the actual all-time high of Bitcoin. Now, where is, not at that time, the all-time high, right? This all-time high sitting at almost $65,000 was then repeated with a double top at $69,000 until there was a subsequent retracement all the way down to 16K. Now, I'll pop in a second chart here, a logarithmic chart that I made a prediction on when Bitcoin was sitting around a little around $7,100-ish, where you can clearly see in the top left-hand corner my actual prediction for price, saying that the first bull run will take Bitcoin in around $66,000 as the all-time high, and that the second bull run will take it as high as $1 million plus. So the price prediction was very clear at that time, even when Bitcoin was trading around $7,000. And it was clear to me at that time that 7K was not the bottom and that there would be further retracement, as I've predicted here. So what's next? What's next is to show you the time capsule video of 2019 in its unedited format, where I attempt to explain in sequence why and how I came about creating this fib box and why I thought it would be an effective method to predict future price movement. And as you can clearly see, all of that data is still here unaltered in its form. Big shout out to TradingView for keeping all of this alive. Quite a interesting study here that we can gather. So without further ado, I going to show you the time capsule video. Hope you enjoy. And if you got any questions about this or you glean something from it and apply it yourself, please let me know. Hopefully this is educational and also entertaining.
All right. Hello, everybody. Today I'll be talking about a very interesting correlation I found when charting Bitcoin. I'm using two primary techniques, time fibs and fib price retracements, to be able to make a very interesting prediction about the potential future of the 2020, 21, and 22 markets for Bitcoin. The information kind of speaks for itself, so I'll get right to it. To get a good gauge on what's going on in 2019 for Bitcoin, we really have to take a look back at what has happened for Bitcoin in the past. And there's no better place to look at it than Bitstamp on TradingView, because it has arguably the longest recorded exchange history, and it takes us all the way back to 2012. So the first piece of information to consider is the halving that occurred on November 28th, 2012. It was the first one, and subsequently there was an incredible price hike due to the supply being cut in half. And that's rather obvious when you consider that price point is supply and demand, and you cut supply in half, it's exactly what is expected to happen, an incredible price hike. So if you measure the price point on November 28th, and then get the percentage increase to the high of $260, that makes out for a 2,073% price hike over a time frame of 133 days. Once we hit that peak, the interesting part really comes into play about this entire system I'm using here, and that's actually the retracement that subsequently follows. So the time fibs that I'm drawing are the 0, 1, 2, 3s on the bottom. Those are numbers within the Fibonacci sequence. So to draw these time fibs, you're only using 2 points, the 0 and the 1. So the 0 lands on the peak of the move, being $260, and the 1 subsequently needs to land on a candle that meets this following rule set. It has to be the lowest relative candle that is within this region. It also has to be followed by an uptick, creating this V shape. The uptick cannot be higher than the previous high, and also the candle that lands on the 1 has to break the long-term upward support trend. So we see with the naked eye, you can draw the support here, and that's clearly been broken. So that fits that following rule set. And the price for the fib retracement is the 1 landing on the peak of the move and the 0 landing on $2.22, as that is the lowest recorded price point that Bitcoin hit on Bitstamp. And once you chart this out, you get this very interesting matrix. Now, also to consider, there in the bottom right-hand quadrant, there is another fib retracement where the 1 lands on the 236 of the large fib and the 0 on the $2.22. So once this matrix has been drawn out, it really starts to look very interesting when you actually scope it out and see what's going on in a larger time frame here. It's very stark that within the 89 region is where the retracement ended and the cupping really began and the subsequent bull run started. It's very evident here. And when you look into the actual price of where this retracement happened in, we fell to the 236 region and bounced right off of that and continued moving forward. Now, if you are to get more nitpicky into it and consider this piece of information, the candle over here did hit as low as the 786 on the smaller right-hand quadrant fib. Also, important pieces of information to consider is the duration of these runs. So when you're talking about the bear market here, that lasted 89 days, and that is measured from the peak of the move all the way to where the 89 in the time fib lands. And the bull run here is measured from the ending of the 89 to the peak of the next subsequent move, and that lasted 145 days. The orange region is measured from the ending of the 89 to where the price point beats or breaks above the previously set high of, in this case, being $260, and lasted 121 days. These are all key pieces of information to consider, both the time from the halving to the peak, to the bear market, to the bull run, and the bull run before we break the previous high. These dates will be added up together, and we're going to be getting the mean average of all the moves following. So after the 2013 run, we subsequently had the 2014 price hike here. Now, when we're looking at drawing the fib time retracement, we're going to be following the exact same rule set. The 0 is going to land on the peak of the move, which is the $1,163, and then the 1 subsequently lands on the candle that is the lowest relative low that breaks a long-term upward support trend, and that is followed by subsequent V retracement that does not beat the previous high. Now, some people could argue that this candle also fits the same rule set, but I would venture to say that it doesn't, due to the fact that it doesn't truly break a long-term upward support trend here. It tests it, but it doesn't violate it as sharply as this candle does. So in my opinion, this is a much more reasonable candle to use for this sort of time retracement. And then the price fib retracement follows the exact same rule set. The 1 at the peak, the 0 landing on the $2.22. Same exact principle applied when you're talking about the bottom right-hand quadrant, of the 1 being the 236 of the large fib. And subsequently, we get a similar matrix here. And again, when we scope it out into the larger time frame here, it seems very stark that the 89 falls again in the very relative region from which we truly began to cup and reverse and start the next bull run. When you're looking at the price points which were hit in the bottom right hand quadrant, you see that we did break below the 236 of the large retracement, and we hit as slightly below the 618 on the small retracement. So thus far, the 2 previous retracements that we've seen have trended within the upper top half of the bottom right hand quadrant. Again, when you scope this out into longer term perspective, it seems very stark that from the 89 the cupping begins. Same principle to consider here, the duration of the bear and the bull markets, in this case being 626 days for the bear market, 852 days for the subsequent bull market, 554 days before the price was beat as the previous high here. Now, another key piece of information to consider is on July 9th, 2016, the next halving occurred. So from this point forth, if we measure the price point on the day of July 9th to the subsequent peak that we hit of $19,666, in this case on Bitstamp, that leveled out to be a 3,041% increase. And that in its entirety lasted 526 days before we hit the pinnacle here. Now, that is rather sharply different than the price hike percentage and time frame that we saw for what occurred in 2013. The percent isn't that far off; it's 1,000%, but the time frame is a bit different. But also the magnitude of the market is much more different. So those are important pieces of information to consider. Once we've hit the peak in late December 2017, early 2018, the same exact principle of a retracement can be followed here as far as drawing the time fibs. Again, the 0 lands on the peak of the 19,666 move, and the 1 subsequently lands on the lowest relative candle that breaks the longer term upward support trend here, that is subsequently followed by an upward retracement that shapes like a V that does not break the previous high. So same rule set followed here. And again, similar rule set with the price retracement, the 1 being the peak, the 0 being the $2.22. And a similar rule set followed with the bottom right hand quadrant. And when we scope this out, we get the following picture. The 89 lands within the region of March of 2019. And as far as the price retracement goes, it seems to be very much so within what we had previously observed in 2013 and 14. We have retraced into the 786, 618 region, the same regions that were hit previously in both 2013 and 14. And now we are approaching the 89 marker, and just without looking at any other information at all and simply looking at it like a layman, you can see not it wouldn't be absolutely out of the blue to consider that Bitcoin would come down here and then relatively begin to bottom out within this region and start slowly trending upwards. It's not completely out of the blue to foresee something like this occurring given the nature of the previous cycles that Bitcoin has gone through. Now, also, another very piece of information that is important to consider when looking at the potential future prospects here is when the next halving is scheduled to occur. Currently, the estimated date is May 25th, 2020, and that is this date right here. Unfortunately, TradingView cuts it off because it's too far into the future, but this blue line is exactly where that date is. Also, there's some very important math to consider when gauging this sort of perspective is just some simple mean averages. And the math is all right here. The numbers have all been presented to you. I'm not going to go too deep into how this is calculated. It's very, very simple. You're simply getting the ratios between bear and bull markets, and then getting the mean average of the ratios, and then multiplying that mean average by the currently measured or expected bear market to get the hypothetical mean average bull market that we could see in the foreseeable future. And that cranks out to be 665 days, given the 2013 and 14 mean average. And the same principle applied to the orange bull market here, which gives us a average of 490 days before we break the previous high set by Bitcoin. And now, there's also a third piece of information to consider, post-halving, how long it took to peak. Now, given the mean average of 133 and 526 days, we come out to something around 330 days from the halving to when we could expect the peak for the next move. Now, that is the blue region here, and this purple region here indicates this region of quote-unquote uncertainty, where one indicator shows that we could be looking at a peak around here, the other one's showing here. So more or less, I mean, this is a very far out prediction here. Consider the scope of this being 3 years into the future. We're not pinpointing dates here. This is pinpointing seasons at best. So this is going to be within this time frame. Now, I can't exactly tell you, unfortunately, what date it is, but just ballparking it from looking at what it is here, it's about 2022. Given pretty much the end of 2021, early 2022 is where this region is pointing us towards, to where Bitcoin will begin to cup around the 89, March, May of 2019, and start moving up here. And it's not too entirely impossible to consider that this motion continues. The halving spurs, a little pump up. We hit the peak, and then we're off to the races again. Given the nature of the previous cycles that we've looked at, it's not too entirely out of the blue to consider. Also, a very interesting piece of information to consider is the potential price hike that we're looking at. The price hike, the mean average of the two post-halving growths that we've seen would come out to be 2,500%. So if we gauge 2,500% off the increase of, a very, very modest 786 retracement being $3,600, if we assume that is the price point that Bitcoin hits prior to going up, a 2,500% increase would put Bitcoin at about $93,000, which is not unexpected. People have talked about this before, but again, it's not too completely out of the blue if the point from which we see that price hike doesn't start at $3,000. What if that point on the halving is $14,000? A 2,500% increase off $14,000 is north of $1 million, undeniably. It's just off the top of my head. So this is all a very optimistic, bright future for Bitcoin. Now, granted, this is simply TA based off previous market analysis, and the entirety of Bitcoin as far as we know, it has been operating within a bull market as far as the global economy goes. For the past 9.5 years, the global economy has been in the longest bull run in recorded history, and Bitcoin has been going hand in hand with that. And um, potentially, a lot of people are pointing to the fact that 2020, 2021 could be the beginning of just a reversal in the overall global economy, and not per se a recession or a depression, but just a correction, hopefully a healthy one. And it's completely, well, no one truly knows how Bitcoin is going to behave within that market, because it has never, none of this market history that we're looking at here has ever once experienced a poor global economic state. So we'll see how that plays out. However, if things keep going the way they're going, it's not too unlikely to see Bitcoin beginning to cup and handle out in the very foreseeable future. So take this with a grain of salt. Position yourself adequately. Don't, you know, don't get wrecked. Is the best way I could put it. Good luck with your trades. I hope you found this informative. If you have any opinions or any kind of comments you want to share or any kind of insight, feel free to do so. I'll try and get back to you. Thank you for your time.